You think you're trading, reading charts, analyzing setups, waiting for breakouts, but you're not doing the action. You're being acted upon. The market isn't a game, it's a machine, a living, breathing, blood-sucking machine that feeds on hope, miscalculations, and liquidity. Every trade you place feeds it voluntarily. It doesn't hate you. It doesn't know you. It runs its process. Input, digest, discard, and you are the input. But here's what they never told you. Once you see this machine for what it is, once you understand its hunger, you can stop being its food. You can become something else entirely. This isn't a metaphor to scare you. It's the blueprint no one gave you. Stop losses don't protect you. They reveal you. Volume spikes aren't signals. They're traps. Order books aren't transparent. They're smoke screens. The exchange, market makers, HFTs, they didn't just play the game. They built the machine you're caught inside. While you learned trend lines, someone else learned structure. While you watched candles, they watched order flow. While you bought breakouts, they prepared to eat the stop run. This has been happening for decades. The market isn't fair, random, or cruel. It's precise, efficient, indifferent. Welcome to Trading Psychology Stick. We decode systems, not signals. Quick disclaimer: nothing here is financial advice. We're exploring market psychology and structure. Your trades, your responsibility. So, the question is simple. Are you the architect, or are you still just the appetizer? The market doesn't punish you, it digests you, bit by bit. A slip here, a stop loss there. You bleed slowly, thinking it's your fault. But what if you're just one of millions being processed mechanically by something far more intelligent than chaos? This isn't a battlefield or casino, it's digestion. The market is a machine that processes inputs, your trades, fears, indecision, and transforms them into someone else's profits, fills, escapes. According to ESMA data, 70 to 90% of retail CFD traders lose money. In India, SEBI found 93% of F&O traders lost an average of 2 lakh rupees over 3 years. That's not bad luck. That's systematic extraction. But here's the twist. Those who survive learn to think differently. Picture this. A new trader sees the perfect setup. Clean structure, RSI bouncing off 40, price consolidating below resistance. Textbook. He buys the breakout. 3 seconds later, slammed. Reverse wick. Stop triggered. Then price recovers and rockets without him. It feels personal, like the market wanted him gone. But it's not personal, it's structural. His entry and stop were mapped by the system's architecture. The exchange routes trades through matching engines, prioritizing certain behaviors. Market makers extract pricing inefficiencies. HFTs anticipate your reaction 1,000 times faster. All interconnected parts of a hungry machine. When you press buy, the machine hears new input detected. Your stop loss becomes a cluster to sweep. The machine operates on flows, probabilities, intention, not logic, fairness, or hope. But once you realize this isn't intelligence versus intelligence, but system choreography, you see the exit route. You start seeing patterns in the hunger. Quick check. Ever felt the market moved against you personally? Comment targeted below. You're not alone or crazy. You're seeing the pattern, and seeing it is your first step to freedom. The machine has no feelings, only rules. Understand those rules, stop being meat. Become muscle, ligaments, synapses. But first, unlearn assumptions. This isn't about setups. It's about your position inside the process. Now, let's understand what the machine really drinks. Your blood. Its name is liquidity. And once you know how it flows, you control your bleeding. Section 2. Liquidity is the blood, and you're the donor. Liquidity sounds safe, like oil for gears. But it's not convenience, it's currency. In this machine, it's blood keeping the system alive. Where does it come from? You. Your trade, your limit order, your desperation for the perfect price. That's what the system drinks with precision. Place a limit order, you donate. You think you're patient. But you're giving the machine a map. It sees where you'll buy, where others sell, calculates extraction routes. You're now a donor. But donors who understand the blood bank rules can choose when and how to give. The machine wants clusters, crowd behavior. That's where the largest blood pools exist. It seeks psychological pressure points, round numbers, key levels, breakout zones. Predictability creates dense liquidity. Dense liquidity means feast. Price approaches resistance. Retail traders load sell orders. Shorts enter. Stops pile behind. You see a wall. The machine sees a buffet. It breaks through, triggers stops, then reverses. That wasn't random or fake. That was a full meal. I once watched a trader place stops exactly 5 pips below every support. Safety buffer, he said. Market would wick down 5.1 pips, grab his stop, rocket up. Every time. He thought unlucky. I said predictable. But when he started placing stops at 3 pips and 7 pips randomly, his survival rate jumped 40%. The machine loves predictable. Break the pattern, break the digestion. Even when you think you're smart, sniping entries, hiding stops, you're leaking data. Every action tells the machine something. Your behavior becomes fuel, but behavior can be camouflaged. Stop donating without intention. Stop trading levels because everyone does. Ask, who needs this break? Who's on the other side? What does the machine want? Think structurally, stop being blood. Start reading flow. Start choosing when to bleed. Flow has shape. Patterns live inside something traders never understand, the order book. Once we decode it, you'll see both the trap and the escape route. Section 3, the digestive trap of the order book. The order book, that window of bids and asks proving transparency. But it's not a window, it's a hall of mirrors. If you think it's real, neutral, or useful, you're trapped. But traps can be turned into tools. The order book shows limit orders, intentions to buy or sell. You look for imbalance. Bid stacking means buyers strong. Thin asks mean breakout coming. But the book isn't truth, it's bait, and bait tells you where the fisherman stands. Most orders aren't meant to be filled, they're meant to be seen. Spoofing, placing large orders without execution intent, is rampant. Flash orders appear and disappear in microseconds, probing liquidity. Imagine a digestive tract rearranging every second to confuse you. That's the order book. Not appetite display, but illusion stage. You're not observer, but observed. React to what you see, and the system adapts. Roots you, matches you, swallows you. Picture buy orders stacking. Price hovers above. You interpret support, go long, orders vanish, price dumps, you're trapped. The wall was fake, built to make you commit, torn down once you bid. But here's the power. Once you know walls are fake, you stop leaning on them. You start looking for the wall builders. Where are they really positioning? What do they want you to see? The illusion becomes intelligence when you flip perspective. Pause. Think about your last trades. How many were influenced by order book walls that disappeared when needed? You're seeing the illusion. Now use it. Watch for fake walls. Trade the opposite. The magician's trick loses power when you know the method. The book is alive, reactive, self-optimizing. It adapts faster than you. Yet traders rely on it because it's addictive, gives illusion of insight. But real insight comes from seeing through illusions. There's one more layer, deeper than visible orders, where real traps are laid, stop losses. But also where your greatest protection lives, if you know how to place it. Section 4, stop loss. Equals auto-digestion, or armor. Stop loss sounds like protection, a safety net. But what if it's also a spotlight tagging you for removal? In the machine, stops aren't private. They're data, opportunity, scent. But scent can be masked. You set a stop just below support. Textbook risk-reward. Feels secure. But when price drops there, it slices through, grabs hundreds more stops, then reverses. You feel betrayed. The market knew, because it did. Stop hunting isn't paranoia, it's protocol. Your stop is a cluster, magnetic field. Spike in the flow map, algorithms find and consume. You're not placing boundaries, you're contributing to harvest points. Unless you learn disguise. Everyone was taught the same. Stops below support, above resistance. The crowd breathes together. Stops stack. The machine inhales at once. But what if you breathe differently? Liquidity providers and institutional algos route based on stop density models. They scan, execute sweeps, trigger liquidations, reverse positions in seconds. You thought responsible. You were delicious, until you weren't. Tomorrow, before placing a stop, ask, where would everyone else put theirs? Don't put yours there. Try a logical placement that still protects capital. Behind the obvious hunt zones. In the no man's land, where algorithms don't bother scanning. Watch your survival rate transform. Stop asking, where do I protect myself? Ask, where does the machine want me? Structure-aware traders don't just avoid traps. They set decoys. They place tiny orders at obvious stops. Real protection elsewhere. Use the machine's hunger against it. The stop loss becomes armor when placed consciously. Not where it should be, but where it shouldn't be found. Next, we decode the nervous system. The reflexes, spasms, signals you misinterpret as price. They're not price, they're intention. And intention can be read before it acts. Section 5. You're not trading price, you're responding to nerve signals. Price is skin, surface flicker on your screen. Beneath pulses something else. Intention. Markets don't move from patterns but decisions creating pressure, not price. Can't read pressure? You're not trading. You're twitching like a muscle without brain. But muscles can learn. You see stalled price, interpret indecision. See bullish engulfing, interpret strength. But you're seeing action residue, the echo. Price is symptom, not source. To trade price is chasing footprints instead of the runner, but footprints tell you direction. Watch a tight range, low volume, wicks everywhere. Sudden jab down, wick, bounce. Should you long? Something aggressive in that formation. Velocity, intent. Not random, but machine reflex. A probe testing elasticity. Now it has answers, and so do you. That wasn't price discovery, but behavioral analysis. The machine reaching out, firing signals, seeing what contracts, reading you while you reveal yourself. But two can play this game. You can reverse this. Stop fixating on numbers. Start watching reactions. Trade like a structural organ. See how price flinches, levels respond, volume dilates when shocked. Feel flow, don't forecast. Your entries become strange, not logical or textbook, but right. You're intercepting intention. Best trade I witnessed. Colleague went long Bitcoin during apparent breakdown. Everyone thought insane. He said, watch how aggressively they push down. That's not selling, that's manufacturing. 2 hours later, Bitcoin exploded. He read desperation, not charts. You can too. Pattern trading dies in volatile markets. Patterns are static. Intention is dynamic, flexible, deceptive. Can't read lies, can't survive. But lies have tells. Desperation has signature. Fear smells different than confidence. How often do confirmed breakouts whipsaw you instantly? Not bad luck. You mistook surface tension for internal flow. Read skin while the system moved muscles. But now you're learning anatomy. Once you see price as behavior, not truth, you notice what the market wants, where it needs maximum consumption. And this leads to understanding why some always win while others always feed. Markets aren't fair because machines aren't symmetric, built for some to win, many to feed. But asymmetry once seen becomes opportunity. Section 6. Asymmetry equals genetic design and your edge. The machine isn't broken or rigged how you think. It's elegant and dangerous. Not meant to be fair, but to survive. Survival requires asymmetry. Structural imbalance letting certain players feed while others are fed upon. Not a flaw. Genetics. Market DNA designed for efficiency, not equal opportunity. But DNA can be hacked. Asymmetry exists everywhere. Access, speed, data, influence. Latency. Institutions co-locate servers inside exchanges. Orders travel shorter distances. Retail waits 300 milliseconds. Co-located react in 3. Physical asymmetry. They act before your decision reaches the pipe. But speed isn't everything. By 2024, HFT accounts for 50+% of U.S. equity trades, 60% of futures. The HFT market worth $10+ billion, growing 12% annually. Not traders, but extraction engines at microsecond speeds. But engines have blind spots. Information asymmetry. Level 2 data. Order flow models, dark pool prints, the hidden neural network, not free or public. Priced for those who matter, but patterns leak, footprints show, the informed leave traces. Even incentives asymmetric. Market makers paid to add liquidity. Profit before price moves. You need direction. They need your entry. You sprint mazes. They operate toll booths. But toll roads can be avoided. Pause. Breathe. Feels overwhelming. Like impossible game. It's not. Gazelles know lions are faster, stronger. Do they quit? They adapt, learn patterns, develop strategies. Asymmetry is real, but not absolute. David beat Goliath by changing the game. Psychological asymmetry costs most. You think you choose and analyze, but behavior is predictable. Pain points, stop sizes, FOMO moments. Known, coded into models shaping system response. But predictability can be weaponized. Be so predictable, you're unpredictable. This isn't about rage or demanding fairness. It's awareness. Don't need to be fastest, richest, or most informed. Just need to stop playing their game. Start playing yours. Use their assumptions against them. That's where asymmetry becomes power. See it, name it, sidestep jaws. Turn their strength into weakness. Speed means rigidity. Size means visibility. Power means predictability. Now let's see what processes you. The stomach. The exchange. Section 7. Exchanges are the stomachs that need you. You've felt the teeth. Meet the gut. The exchange. Not neutral middleman or matching engine. It's the machine's stomach, churning, processing, deciding who's digested first. Doesn't exist to help you, exists because of you, and that need is your leverage. Exchanges seem simple, match buyers and sellers, but they are appetite creatures. They don't just process trades, but monetize how you trade. Order types, routes, speed, sequence, all become food for profit extraction. But stomachs need constant feeding. You click market buy, thinking best price. But orders get split, redirected, delayed microseconds, filled across venues. Your trade isn't transaction, but opportunity packet. Exchanges sell order flow. Payment for order flow is digestion protocol. Your urgency, their margin. But what if you weren't urgent? Many exchanges pay market makers for limit orders. They get paid to sit still while you pay to move. Your market order hits their liquidity. They collect spread. Exchange pays them again, but patience pays too. Collocation means sub-millisecond advantages. They see order book shifts before you blink, digest intent before you act. Exchange profits offering this privilege. But not all battles need speed. Exchanges thrive on volume, not quality or intelligence, just quantity. More clicks, more food. So they gamify, advertise tight spreads, reward speed. Your engagement is glucose, but fasting is powerful. Uncomfortable truth. Exchanges profit more from failed traders. They trade more, revenge trade, overtrade, generate volume without profit extraction. But conscious traders trade less, profit more. Quality beats quantity. Most think exchange is the machine. Understand exchange rules, understand system. But exchange is just organ, stomach, converter. Doesn't set rules, enforces digestion. And every stomach has foods it can't digest. Next time you trade, ask, who digests this first? Who profits from my urgency? Then ask, how can I be the bone, not the meat? You're not alone in this machine. Others move differently. Silent, invisible, deadly, the viruses, stealth traders. But viruses can be symbiotic. Section 8. Market makers. Equal immune system that you can befriend. Every organism has defense mechanisms. The market's immune system, market makers. Not just liquidity providers filling gaps. They're the immune response. Their job isn't just keeping markets liquid but alive. That means eliminating inefficiency, risk, and you when predictable. But immune systems can be trained. Market makers don't care about your analysis or direction. Their edge is flow. Profit from spread, speed, reaction. See orders before you. Feel pressure building. Sense imbalance. Respond with code. But codes can be learned. You see bullish setup. Resistance tested. Volume rising. Enter thinking ahead of curve. But your order plus thousands like it triggers immune response. Market makers don't just absorb. They offset, hedge, reverse. Not because you're wrong, but for system balance. Work with balance, not against it. Price stalls exactly where retail expects breakouts, because you're pressing machine nerves. Too many pile in, system reacts like immune cells to virus. But what if you weren't the virus? What if you were the vitamin? Market makers are layered, some passive, others high-frequency nanosecond monsters, some on exchanges, others in dark pools. All smooth the machine, eliminate behavior spikes, but smooth operators need rough patches to smooth. Friend at trading firm said, "We don't predict markets, we count cards." When everyone bets red, they accumulate black, not knowing outcomes but providing balance. You can count too. When everyone's left, consider right. Your survival depends on visibility understanding. Enter where everyone does, place obvious stops, move predictably. You trigger the swallowing reflex, but move differently, survive differently. Not about hiding, but structure shifting. Ghost movement. Learning when not to enter. When providing liquidity serves you. When taking it makes sense. Dance with the immune system, don't fight it. The immune system isn't evil, it's efficient. Understand its job, help it sometimes, and it helps you. Symbiosis beats parasitism. Master execution layer next. Not just where, but how you enter determines detection speed and profit probability. Section 9, the enzymes of execution, your signature move. Digestion starts with enzymes, microscopic agents breaking down food, identifying structure for absorption. Your execution is the market enzyme. Most don't realize they're feeding the system in its easiest digest form, but enzymes can be selective. Execution seems technical: buy, sell, market, limit, done. But every choice sends more than signal, sends signature, tags you, desperate or patient, informed or guessing, emotional or calculated. As signatures can be forged, market orders, fast, direct, aggressive, like shouting, "Feed me anything now." Machine loves urgency, but sometimes urgency is strength, sometimes patience is weakness. Context determines digestion. Limit orders seem safer, but they're visible, exposed, adding to liquidity pools. Sometimes visibility is vulnerability. Sometimes it's power. Knowing when makes the difference. Iceberg orders show partial size, rest hidden, clever until algorithms detect fragmentation. But fragmentation can be intentional misdirection. Show small, think big. Show big, act small. Order splitting reveals patterns. But patterns can lie. Split differently each time. Use Fibonacci, use random, use intuition. Become unpredictable by being systematically unsystematic. Experiment. Next trade, flip 3 coins. Heads, heads, heads. Market order full size. Tails, tails, tails. Limit order 10% size. Everything else, create your own rule. Watch how different combinations change outcomes. Build your execution signature. Execution isn't trade end, but exposure start. Not just entering, but declaring. Make declarations that confuse. Mix signals. Be the enzyme that sometimes digests, sometimes builds. Adapt. Become unpredictable. Randomize with purpose. Sometimes take, sometimes make. Sometimes loud, sometimes silent. Refuse consistent flavor. The system can't digest what it can't categorize. That's where stealth begins. Not hiding intent, but multiplying possible intents. The best are everywhere and nowhere. Quantum traders. Section 10. Stealth traders. Equal viruses. Study them. Viruses enter silently. No banners or noise. Slip in, replicate invisibly. Alter hosts without alarms. Stealth traders are market viruses. Don't fight systems, live within them. While retail screams for confirmation, they've executed. Quiet, surgical, gone, but they leave lessons. You've seen footprints, odd candles spiking both ways, closing flat, liquidity zones vanishing before price arrival, breakouts barely breaking yet, flooding movement. Not accidents, but shadows. Learn to read shadows. Stealth traders use time, not size. Shape price, don't chase. Break large orders down. Hundreds become tens, become ones. Slice, scatter, route through venues. But more importantly, they think in campaigns, not trades. Fund wants millions in position. Size kills edge through slippage. So algorithms study flow, predict liquidity pockets, slip unnoticed. Over hours, days, weeks. Position built, price barely moved. Be patient like viruses. While you await confirmation, stealth creates conditions you're waiting to see. Your breakout fires, they've exited. You enter as they leave. But what if you learned their timing? Ever see massive moves without news? Just explosive movement? Comment ghost move if witnessed. Those are stealth footprints. Study them. Time them. Find patterns in the patterns. Stealth traders are dangerous but educational. Don't fight machines. Learn from them. Their absence teaches more than presence. What didn't happen tells more than what did. Defense isn't defense, it's education. Stop assuming full pictures. Start seeing negative space, the unfilled level, the missing volume. That's stealth language. Learn it. Can't beat viruses, but can learn behavior. Can't be them, but can think like them. Trade less like flashlights, more like shadows with purpose. Even stealth faces one enemy, the force that turns positions into traps, adverse selection. But knowing it exists is half the immunity. Perfect setup, clean entry, everything aligns, yet instantly underwater. Not because markets moved, but moved against you knowingly. That's not paranoia, that's adverse selection. But diseases known can be treated. In autoimmune disorders, systems attack themselves. Adverse selection is market autoimmunity. System punishes participation. Follow rules, enter logically, get targeted for inferior information. But information asymmetry can be minimized. Brutal truth. If someone knows more on the trade's other side, you've already lost. Your trade didn't express opinion, but exposed weakness, like showing cards in poker. But what if you showed different cards? HFT algos see iceberg orders revealed piecemeal. Volume increases, you see strength, they see desperation, they front run. But icebergs can be decoys, real positions elsewhere. It's positioning. Funds unwind positions silently. Structure looks weak, you short. Your size is noise and planned unwinds. But understanding the unwind schedule helps. Watch for patterns. Quarterly rebalancing. Options expiry. Known events create unknown opportunities. Dark pools execute secretly. FINRA shows 15% of U.S. stocks trade dark. Some stocks over 50% off exchange. You trade echoes. But echoes have origins. Trace them. Like poker where everyone sees your cards, but you see only some of theirs. Not playing same game. So, change games. If they see your cards, show cards that don't matter. Keep real hand hidden. Adverse selection. Wrong place, wrong time, wrong lens. But mostly wrong assumptions. Assume you're outgunned. Trade like it. Use their confidence against them. Not hopeless, but educational. Shift perspective. Stop seeing isolated trades. See campaigns. Let systems reveal before committing. Be the adverse selection sometimes. One more battleground where speed kills, but also where patience pays. The Q war. Where milliseconds matter, but wisdom wins. Section 12. The Q war equals microtubule battlefield. Choose your battles. Q looks simple. Place limit order, wait in line, get filled at your level. Fair, predictable. But this isn't bakery lines. It's molecular battlefield. Microsecond war. Position differences between first and third aren't profit but extinction, unless you fight different wars. The order book is living chains waiting to be touched, filled, skipped. Further back means less likely fills. Your Q position determined by price, time, venue, order type, entry speed. In that lag, predators feast. Or do they? You think you're book top, but while received, processed, routed, thousands beat you. HFTs, co-located bots jumped nanoseconds faster. Your edge became back of line. But what if you never wanted front? Not inefficiency, but design. Machine rewards speed because speed is predictable advantage. But predictability is vulnerability. Sometimes back of line is exactly where you want to be. Let others trigger moves. You catch waves. Q jumping through hidden order types exists. Not cheating, but optimizing. But optimization has cost, complexity, rigidity, predictability. Simple sometimes beats complex. You feel trades almost worked. Right level, right time, never filled. Others moved, but almost is information. Almost tells you where pressure builds. Use almost as intelligence. Reality check. From liquidity to stops, order books to Qs. Feels impossible? Remember, not every battle needs winning. Choose battles that matter. Let speed demons have their game. You play different game. Fight back? Stop winning with speed. Change engagement locations. Seek levels others avoid. Enter during imbalance, not obvious moments. Place orders where nobody wants. Ghost fills appear. Machine rewards hustle, sometimes. Also rewards patience. Rewards speed, sometimes. also rewards position. Find your edge. It's not where others look. Perfect placement and execution can't prevent the final trap, the behavioral loop that catches most. But loops recognized can be broken. Section 13, the noise trader. Loop your graduation test. Wake up. Open app, scroll charts, see movement, take trade, feel rush, stop hit, frustrated, repeat tomorrow. The noise trader loop. But loops are just patterns, and patterns can be broken. Not just cycle, but system feature. Machine doesn't tolerate noise traders, depends on them. Their engagement feeds everything. Without them, no volatility, no food. But being food is choice, not destiny. Noise traders don't know their noise. Believe they apply logic, use indicators, follow news. But core behaviors reveal them. Contextless entries, movement chasing, emotional reaction. Need expressed as trading. Start subtle, win trades, confidence builds, risk increases, losses come, switch strategies, new indicators, new mentors. But changing tools without changing behavior is like changing clothes while staying dirty. Noise trader sees Bitcoin pushing resistance, breaking out, longs, stopped, flips short, stopped, revenge trades, logic gone, machine just waits. Not market but echo chamber, secret, loudest traders are hungriest, not for profit but action, need movement to feel alive. But markets don't entertain, they transfer wealth from impatient to patient. Are you entertainment seeking or wealth building? Hidden danger, loop feels productive, trading, active, learning, no. Repeating mistakes with fresh paint. Growth isn't activity, it's evolution. Escape, break rhythm, trade less, watch more. Best traders spend 90% waiting, not watching, waiting for structure, signal, opportunity. Move with purpose, not compulsion. Stop thinking like candle chaser. Think like ecosystem participant. If trades don't create or exploit imbalance, they don't belong. Participating isn't trading, extracting is. The noise loop isn't just behavior, but identity. And identities change only through transformation. Ready to transform? Then see the blueprint. Section 14. The system is closed until you see the blueprint. Keep thinking you'll discover secrets. With effort, unlock what others miss. Truth, system is closed. Finite, self-reinforcing, optimized to feed on discovery. Every insight already absorbed, priced, weaponized. But that's not the end. It's the beginning. The house wrote the layout. You walk mazes designed infinite but ending circular, unless you stop walking their maze and start seeing it from above. Final illusion. Markets are open-ended puzzles. Effort leads to mastery. But you're inside digestive cycles. Until you step outside loops, always pray. So, step outside. Breaking out? See blueprints. Stop obsessing price. Study structure. Not, what's market doing? But why does system allow this trade? Every trade asks, where am I in flow? Input, friction, function. Think loops, systems, reflexes. See microsecond queue ecosystems, liquidity magnetism, market maker regulation, stealth engineering. Your participation isn't permitted, it's designed. But design understood becomes advantage. Realization lands. Strange things happen. Stop reacting. Slow down. Observe machine from outside, not above, but around. Notice rhythm, not randomness. No longer chase. Time. No longer place. Design. Feel pressure, not see candles. What changed everything? Stopped asking, how do I win? Asked, how does system win? Then asked, how do we both win? Market became less adversarial, more ecological. Essential understanding. Don't outsmart machines. Stop announcing yourself. Start being useful to the system while serving yourself. Trading looks lucky to others. Enter before moves. Exit before fades. But not magic. Structure, blueprint vision, moving like structural cell, not food. That's the shift, from food to function, from fuel to architecture, from victim to participant. But integration requires emotional evolution. Even seeing machines, temptation remains. Old patterns call. That's the final test. Section 15. Become a structural cell, not a consumable one. Every market part serves roles. Some transient, noise, fuel, vapor. Others persist. Walls, pressure transmitters, digestive supporters never digested, structural cells. Don't chase or scream. Build unremovable positions. Difference isn't intelligence, it's identity evolution. Becoming structural requires fantasy release, won't beat machines by war, but can thrive through integration. Not fighting currents, but swimming so precisely you become current. Ever watch price move exactly as anticipated without you? Not failure, observation mastery. Structural thinking begins here. Cells don't chase, transmit, don't jump, flow. Structural traders seeing breakouts don't crowd enter. They wait, measure, test, detect loading or baiting. Enter when others' digestion begins. Ride imbalance professionally. When wrong, inevitable, they don't panic. They adapt. Capital isn't identity. Edge isn't prediction, but adaptation. Systems breathe. Losses aren't failure, but system friction. Cost of integration. Stop reacting to price. Interact with structure. Know the maps. Feel the flows. Read the rhythm. Become part of the music, not noise. Final thought: markets aren't enemies, but ecosystems. Predators, prey, and symbionts exist. Goal isn't conquest, but integration. Become so essential they can't digest you. Architecture, not food. Secret: markets need structural traders. Like bodies need bones, machines need stability providers, stress absorbers, system coherence maintainers. That's your role. That's your edge. Step into that role. Markets stop feeling hostile. You've become part, not victim. Not guessing direction, but facilitating it. Not reaction, but function. Stop thinking like predator, prey, or trader. Think like system, adaptive, persistent, indigestible, essential. This is your evolution. From noise to signal, from food to structure, from traded to trader. You've seen inside, blood, nerves, stomach, machine. Something should feel different, not just informed but transformed. No longer seeing markets as prediction stages but as living systems. You have a choice. Forget what you saw, return to old patterns, chase obvious setups, place predictable stops, trade emotionally. The machine waits, always hungry. Or evolve. Rewire your approach. Think structurally. Ask better questions. Trade less, observe more. Feel the flow. Become invisible when needed, visible when useful. Most creators say like, comment, subscribe. I won't. This wasn't made for subscribers, but for evolvers. Instead, I ask, if this opened your eyes, if you see the machine differently now, comment, I see the machine now. If you've escaped the noise loop, share how. Not for glory, but for others still trapped. This isn't just a channel, but a tribe. For those who see deeper, who choose evolution over repetition, who become structure, not food. The market doesn't punish weakness. It digests predictability. Your immunity is evolution. Welcome to Trading Psychology Stick, where we don't fight markets. We evolve with them. We become what can't be digested. The machine is hungry. But you're no longer on the menu. You're part of the kitchen. Welcome to the other side. Delete this video after watching, because what you're about to learn will flip everything you think you know about trading. Last Tuesday at 3:47 p.m., I watched a $2.3 million order get executed on Bitcoin. The interesting part? The trader who placed it lost money on purpose. Why? Because 7 minutes later, retail traders flooded in at the breakout. That same trader sold into their buying, banking $847,000 in pure profit. See, he wasn't trading Bitcoin, he was trading you. And once you see how this invisible chessboard really works, you can never unsee it. Welcome to Trading Psychology Stick, where we decode the hidden games that separate winners from everyone else. Quick disclaimer, this isn't financial advice. I'm sharing psychological frameworks that change how I see markets, your money, your decisions, your responsibility. Now, let's begin. Act 1, The Awakening. Chapter 1, most traders play checkers on a chessboard. There's a reason 93% of retail traders fail, and it has nothing to do with intelligence, or strategy, or time on screen. It's because they think they're playing checkers on a chessboard. In checkers, the goal is simple: move forward, capture, win. Each piece moves the same. The game is direct, linear, predictable, but trading isn't checkers, it's chess. And in chess, each piece has a different personality. Some attack, some defend, some sacrifice, some wait. Worse, the real moves don't happen on the board. They happen in the mind of the player. Most retail traders learn just enough to lose consistently. They memorize indicators like MACD and RSI. They chase clean chart patterns. They wait for confirmation. They react to candles. And then they wonder, why did the breakout fail? Why did it pump after I sold? Why is it always me? Here's the truth. You're not just playing against the market. You're playing against everyone inside it. Remember March 2020, when SPI hovered at 340 resistance for 3 days? Retail saw consolidation. Smart money saw distribution. The result? A 30% crash in 2 weeks while institutions bought the fear. That failed breakout? It was a trap. That sudden dump? It was liquidity harvesting. That clean setup? It was bait laid out for the next pawn. And the moment you saw the move, someone else saw you. In chess, beginners chase checks. Masters chase positioning. They think in arcs, traps, psychological pressure. In trading, beginners chase signals. Metatraders chase intention. Because price is never random. It's narrative made visible. It's emotion translated into ticks. The average retail trader holds positions for 3.2 days. Institutions, 67 days. One is playing checkers, the other is playing chess. And until you stop asking, what is price doing? And start asking, who wants me to think this? You will keep being moved like a piece instead of becoming the player that moves others. Every trade is a conversation between fear and conviction, between weak hands and strong hands, between you and someone betting against you. So the real question is, are you thinking like a pawn, or are you ready to think like a predator? Because from here on out, we stop reacting to the board and start studying the mind of the one who set it up. But wait, if I'm not the only one on the board, who exactly am I playing against? And how can I beat someone I can't even see? Chapter 2. Who you're really playing against. Here's what no one tells you about trading. The market is not your enemy. The people inside it are. Because behind every candle, every pump, every dump is a human or an algorithm with an agenda. And if you don't know who they are, you're already losing. Let's meet your real opponents. First, the retail herd. They're everywhere. Reddit threads, Discord groups, YouTube signals. They chase green, they panic at red, they buy after price rallies, they sell right before the bounce. They use the same tools, RSI, MACD, bull flags. They use the same language, to the moon, or rugged. And because they're predictable, they're hunted. Smart money doesn't fear retail. It feeds on them. Quick story. I once joined a trading Discord with 50,000 members. Every morning, the same pattern. Admin posts a setup. Within minutes, hundreds typing LFG and aped in. The chart always pumped points by the time they posted. Guess who was selling to them? Second, the smart money. Funds, whales, institutions. They're not here to play fair. They don't trade for dopamine. They trade to win. They understand liquidity. They create the trap, then leave breadcrumbs for you to follow. They short when you go long. They dump when you're finally convinced to buy. They use tools you don't even know exist. Block orders, dark pools, spoofing, narrative campaigns. And they're patient. They don't need to win this trade. They just need you to show your hand. Third, the algorithms. You can't see them, but they're everywhere. They don't feel. They don't guess. They don't sleep. They scalp volatility, front-run orders, sniff liquidity. They don't care about the why, only the pattern. Remember the flash crash of May 2010? The Dow dropped 1,000 points in minutes. Not because of news, because algorithms detected selling, amplified it, creating a feedback loop. Real money made millions in the recovery. Retail got stopped out at the bottom. But algorithms are also predictable. They're good at what was. Metatraders focus on what's becoming. Fourth, the market makers. They're the house. They create the game. They need both buyers and sellers to make money. So they move price not to reflect value, but to manufacture imbalance. Their goal? Get enough traders leaning one way, then pull the rug. They don't chase you. They wait until you chase them. Now, here's the kicker. You'll never see these players directly. You'll never get a face. You'll never get a name. But you can see their footprints. Wick rejections where stop losses cluster. False breakouts before big news. Heavy volume in dead zones, price moving with no liquidity beneath. Every trap leaves a trail. I tracked Bitcoin's movement around options expiry for 6 months. Every single time, price magnetized toward max pain. Coincidence? Or someone making sure the most options expired worthless? So, when you look at a chart, ask, who benefits if I buy here? Who's on the other side of this trade? Who wants me to see this setup? Because once you start asking those questions, you stop being the hunted and start becoming the hunter. But knowing your enemy is only half the battle. The real question is, why do you keep falling for the same traps over and over? Quick pause, take a breath. You know what's funny? My 8-year-old nephew watches me trade sometimes. Last week he asked, "Uncle, why does the green bar make you scared and the red bar make you happy?" Kids see everything backwards. Or maybe they see it exactly right. When everyone's euphoric, I get nervous. When everyone's panicking, I get interested. If an 8-year-old can see this, what's our excuse? All right, let's dive deeper. Chapter 3, The Pawn's Curse. Why predicting price fails. Pawns move forward, that's all they know. One square at a time. Linear, blind, predictable. They don't ask why, they just go. That's how most traders approach the market. They scan for setups. They look for signals. They want confirmation. They want to know, will price go up or down? But here's the truth. By the time you're asking that question, someone else has already answered it and is positioning to use your reaction as their entry. This is the pawn's curse. You see a green candle and think, I'm late. But maybe there's still time. You see a red candle and think, I knew it was a fake out. Let me jump out now. And with every move, you're not acting. You're reacting. You're not playing the market. You're playing your fears. Let me tell you about February 2021, GameStop. Everyone saw the squeeze. The headline screamed, democracy. Retail wins. But zoom out. Who provided the exit liquidity at 400? Who sold calls at 800 strike? The real winners weren't on Reddit. They were selling into the euphoria they helped create. Kings don't react. They prepare. They don't chase. They wait. They don't ask, is this the breakout? They ask, who's trapped here? And how can I profit when they panic? That's what a metatrader does. They think in layers, not just what the market is doing, but what other traders think it's doing, and what the smart money wants them to believe. Imagine 2 players, same chart, same setup, same candle. One sees a breakout, the other sees a liquidity grab. One buys, the other shorts. Guess who wins? The one who sees the game above the game. The one who realizes most breakouts aren't real. They're traps. Most pumps aren't organic. They're engineered. Most losses aren't bad luck. They're positioning misreads. So stop trying to predict price. Start predicting behavior. Ask, who's scared right now? Who's greedy? Who's stuck? Who needs to exit? And most importantly, who's being played and how can I be the one playing them? Because when you stop chasing price and start anticipating intention, you're no longer a pawn in someone else's strategy. You're a player, a predator, a kingmaker, and kings don't flinch. Take a moment here. Think about your last 3 losing trades, not the price action, the emotion you felt right before entering. Were you chasing or preparing? Comment below with one word that describes that feeling. I bet 80% of you will write the same thing. Chapter 4, Castles and Traps, How Smart Money Baits You. In chess, a fork is deadly. You make one move, and suddenly 2 of your pieces are under attack. No matter what you do, you lose something. In trading, smart money plays the same trick. They create forks, setups that look bullish to retail, but are designed to trap them. They move first, not to win the trade, but to make you commit. And when you do, they pull the trigger. This is the anatomy of a liquidity trap. A clean trend line gets broken. Volume spikes just enough to create FOMO. The crowd piles in with late longs, over-leveraged buys, then, like a guillotine, reversal, liquidations, panic, exit, and finally, the real move begins in the opposite direction. Sound familiar? Let me show you exactly how this played out with Tesla. In November 2021, price broke above 1,200, clean breakout, volume confirmation, Twitter exploded with new ATH incoming. What happened next? Immediate reversal to 900, $300 wiped in days. But here's what most missed. The day before the breakout, unusual options activity showed massive put buying. Someone knew. It wasn't a failed setup. It was a design trap. Why would smart money do this? Because they don't just need a direction. They need liquidity. For every buy, there must be a seller. But when everyone wants to buy at once, they can't enter without pushing price against themselves. So what do? They create sellers by baiting buyers first. They move price just enough to trigger your strategy. They use your rulebook against you. And they don't stop there. Sometimes they let price hover near key levels. They know traders are watching, waiting for confirmation. Then, a fake breakout, just enough to pull in retail. And once the herd commits, reversal. Just like a rook pinning your queen in chess, and you never saw it coming. The best part? They often lose money on the bait, but it's worth it, because the real profit comes from the liquidation wave you trigger. This is how they control tempo. They dictate when you act, not just what you do. It's not about price, it's about positioning. So, how do you avoid the trap? You stop looking at the setup and start reading the intention behind it. Ask, who benefits if this breaks out? Has liquidity built up above or below? Is this move aggressive or inviting? And most importantly, if I were smart money, would this be the perfect time to lure someone like me? When you ask that question, you switch from pawn to player. You stop following signals. You start decoding traps. And once you can do that, you're no longer reacting to the move. You're predicting the ambush. We've covered a lot. You now know who you're playing against. You understand why chasing price fails. You can spot the traps. But here's the thing. Sometimes the best move isn't a move at all. What if I told you that doing nothing could be your most powerful weapon? Asset 2, the Toolkit. Chapter 5, the King's Patience. Why doing nothing is doing something. In chess, beginners rush to attack. They throw out pieces. They chase early advantage. They want something to happen. But the Grandmaster waits. He builds. He watches. He lets his opponent make the first mistake. Because in high-level play, aggression isn't power. Patience is. Now, look at the markets. Everywhere, traders are pressing buttons, desperate to be in a trade, afraid to miss out, terrified of standing still. Because doing nothing feels like losing. But here's the truth. In trading, doing nothing is a decision, a strategic one, a powerful one. Warren Buffett held $128 billion in cash through 2021's bull run. The finance media mocked him. Lost touch, they said. Missing the greatest bull market ever. Then 2022 arrived. Markets crashed. Buffett deployed $68 billion at the bottom. Who's laughing now? The king in chess doesn't move early. He doesn't get baited into battle. He waits until the board is clear and the moment is right. The metatrader does the same. They don't chase every breakout. They don't fight chop. They don't enter out of boredom. They know most trades aren't worth taking. Most signals are noise. Most setups are unfinished stories. But here's the deeper truth. Waiting isn't just about discipline. It's about gathering intel. Every hour you wait, you're observing. Who's trapped? Where is liquidity pooling? How are the algos behaving today? What mood is the market in? Just like a grandmaster studying his opponent's breathing pattern, you study price action for the hidden hand behind the move. Sometimes the edge isn't in being early, it's in being the last to act, but the first to understand. Because when everyone else is stuck in chop, you're sitting in cash, waiting. And when they finally panic, when their stops hit, you step in like a ghost, not chasing the move, becoming the move. This is the art of passive pressure. You don't react, you don't flinch, you don't commit. You let them make the first error, then you make your move, cold, clean, and irreversible. And that's how kings win, not by force, but by presence, by silence that bends the board in their favor. So, the next time you feel itchy to click, pause, breathe, ask, am I entering because the opportunity is real, or because my emotions can't stand the silence? Because the strongest traders don't need to be in the market every day. They only need to strike when it matters. Pause this video for 10 seconds. Look at your screen right now. How many positions are you holding out of boredom versus conviction? Close the board ones. I'll wait. Chapter 6. Building your own board. The metatrader's toolkit. At some point, the best players stop playing the game. They start playing themselves. In chess, this is when theory ends and intuition begins. You're no longer responding to openings. You're shaping the field, dictating tempo, forcing reactions. In trading, it's the same. After enough cycles, enough traps, enough losses that almost made sense, You stop asking, what is the market doing? And start asking, what can I build? So the market shows me exactly what I need to know. That's when you begin to construct your meta toolkit, not tools to tell you what price is doing, but tools that reveal what others believe, what others are trapped in, and what you should ignore. First, the sentiment scanner. You start tracking emotion, not price. Reddit chatter surging on a coin, Twitter threads pumping a breakout, Discords full of ape in now. You log it, you tag it, you mark when FOMO peaks, because that's often the top. I built a simple spreadsheet tracking social volume versus price on 10 assets. Within 3 months, I could predict tops within 5% just by measuring chatter intensity. When everyone's talking, nobody's left to buy. Second, the liquidity lens. You stop seeing candles. You start seeing where stops are. Where would a scared trader put their stop? Where would a confident but wrong trader enter? This tells you where price will hunt. Third, the narrative map. You no longer react to news. You map how news affects positioning. Ask, what's the dominant story right now? Who created that story? How long can it hold before collapsing? Remember the Fed pivot narrative of early 2023? For months, every dip was bought on pivot hope. Smart money distributed into every rally. When Powell finally said higher for longer, retail was max long. The trap was complete. Because in the metagame, price doesn't follow reality. It follows narrative structure. Fourth, the strategy inventory. You track not just your trades, but your system's mood. When does this setup shine? When does it decay? Which regime kills it fastest? My breakout strategy printed money in trending markets. In choppy markets, it bled slowly. The strategy wasn't broken. I was using it in the wrong weather. Now I have 5 strategies, each tagged to specific market conditions. I only deploy what fits the current regime. Because every tool has a season, your job is to rotate edges, not marry them. Fifth, the no trade detector. Perhaps the most powerful tool of all. A red light, an alert. A bell that rings when you're about to enter out of emotion. It's the guardrail that whispers, this isn't your board today. My rule, if volatility is down 50% from the 20-day average and I'm bored, no trades. Period. This one rule saved me 6 figures last year. These tools don't tell you what to trade. They tell you when you're playing someone else's game and give you the power to stop playing. Because metatraders aren't just system builders. They're battlefield designers. They don't react to volatility. They create clarity through structure. They don't just see the board. They build one where they can't lose. Right now, grab a notebook. Write down 3 tools you'll build this week, not indicators. Meta tools that track emotion, narrative, or friction. Share your best idea in the comments. All right, we're halfway through. You still with me? Good. Let's do something different. I want you to think about the most painful trade you ever took, not the biggest loss, the one that hurt your soul. Got it. Now ask yourself, was it painful because of the money or because you knew better but did it anyway? That gap between knowing and doing, that's where the real game is played. Chapter 7. The Art of Inaction. When not trading is your sharpest edge. Let's say you flipped a coin 100 times, but you only bet when it landed on heads 3 times in a row. Statistically rare, but not impossible. Now imagine you only took action on those moments. How different would your results be? That's inaction as a strategy, not missing out, but filtering out the noise until the signal screams. Most traders overtrade because they confuse motion with mastery. They feel the urge to be in something at all times, as if being flat is failure, as if silence is loss. But in the metagame, this urge is a built-in trap, because the real game isn't can I win this trade, it's can I wait long enough until the board begs me to move. Let me share something painful. In 2019, I tracked every trade for a year. The result? My first trade each day averaged plus 3.2%. Every trade after? Minus 0.8%. I was literally trading myself from profit into loss. The market wasn't beating me. I was beating myself. In chess, grandmasters often spend 20 to 30 moves doing nothing flashy, just slight repositions, tiny edge accumulations. They wait. And then, one small blunder from the opponent, and the entire game collapses in their favor. Because they didn't rush. They didn't need to. They were playing positional chess. In trading, the meta player acts the same way. They sit in cash when there's no clear bias. They skip days when volatility is fake. They watch others burn and chop. They know their setup will return, and when it does, they pounce like a ghost. It's not discipline. It's knowing the cost of action when your edge is low. Why we struggle with inaction. Ego wants to do. Stillness feels weak. The market becomes a test of identity. Dopamine addiction, the click, the fill, the candle rush. You crave it even if it hurts you. FOMO, someone else is printing, you're not, so you force it. But this is the mindset of the pawn, always moving forward, even if it's into death. The meta player waits for transcendence. Here are tactical tools for mastering inaction. Setup scorecard. Only act if your trade scores 4 out of 5 on key conditions. Volatility, narrative alignment, liquidity clarity, sentiment match, technical confluence. Less than 4, pass. Market mood journal. Each morning, write 3 words. How does the market feel? Trappy, clean, nervous, exhausted, energized? If 2 of 3 words are negative, smaller size or no trades. Self-mirror. Check before clicking anything, ask, would I still take this trade if nobody knew I did it? This kills ego trades instantly. Inaction is not passive, it's strategic stillness. You're observing the board, you're watching the players, you're letting others overextend, so you can collect what they leave behind. Just like in chess. A pawn becomes powerful only after waiting, and choosing the right path forward. Let others die in the noise. You wait for signals so strong, it echoes through silence. Here's your challenge. For the next 5 trading days, take only 1 trade per day. Your best setup, nothing more. Track the difference. Post your results with the 1 trade challenge. I guarantee you'll be shocked by what patience produces. Chapter 8. Weaponized risk. How meta-traders use fear as leverage. Most traders treat risk like a fire alarm, something to run from, to avoid, to suppress with tighter stops, smaller size, or hope. But in the metagame, risk isn't just something you survive. It's something you shape, and if used well, it becomes your strongest weapon. Because risk isn't just exposure to loss. It's a lens that reveals intention, pressure, and edge. A grandmaster in chess doesn't flinch when threatened. He evaluates. Is the threat real or a bluff? Does it open a door or close a trap? He doesn't run, he repositions. Sacrifices a pawn to unlock the endgame, trades tension for tempo, uses pressure as a message. You'll need to show your hand before I do. Now apply that to trading. March 2023, bank failures. Credit Suisse collapsing, everyone screaming 2008 again. VIX hit 30, most traders hid. But if you studied the actual mechanics, Fed backstopping everything, liquidity incoming, the best long setup in months disguised as disaster. The crowd sizes down when volatility spikes. Metatraders sharpen their position, sizing rules. The crowd exits early to lock in green. Metatraders trail with logic, not fear. The crowd avoids risk. Metatraders calibrate it. Because to play this game forever, you need to master risk as a state of mind, not just a number in your spreadsheet. 3 dimensions of risk the metatrader uses. First, risk as a thermometer. Before entering any trade, ask, is this my risk or someone else's panic? If you're acting to avoid pain, you're late. If you're acting because others are in pain, you're early. The best trades often feel wrong, because that's where everyone else is uncomfortable, and the reward is high because fear is peaking. Second, risk as a filter. Not every setup deserves your capital. Not every candle is your job. Use risk as a spotlight. High narrative clarity plus low liquidity equals go. Low narrative plus crowd euphoria equals stop. If the trade feels too safe, it's probably already crowded. And crowded trades aren't profitable. They're explosive, just not in your favor. Third, risk as a weapon. You don't need to trade more. You need to bet heavier when the board is tilted. But here's the catch. That requires not trading when it's flat. Discipline isn't just about safety. It's about saving ammunition for when your opponent overextends. That's when you strike, not emotionally, but deliberately. Because concentrated risk at the right moment is what separates noise from legacy. Paul Tudor Jones didn't become legendary by taking small risks daily. He became legendary by betting huge when the setup screamed. Most days, he did nothing. But when he moved, markets remembered. Practical tools for risk mastery, conviction. Sizing grid, assign position size based on a score. 0 to 5 across clarity, volatility, narrative, sentiment, and liquidity. Score below 20, pass, score above 20, scale accordingly. Friction journal, record moments where your system breaks down emotionally. Early exits, revenge entries, paper cuts. Pattern recognition of your weaknesses is risk management. 1 bullet rule, only allow 1 trade per thesis. No retry. If you miss it, journal it. Don't chase it. This kills FOMO and forces quality over quantity. The trader with the biggest account isn't always the best, but the trader who can apply risk when others hesitate and pull risk when others chase, that's the one who becomes anti-fragile. The one who doesn't just survive storms, but grows because of them, just like the king in chess. He doesn't need to move often. He just needs to make every square react to him. So far, we've built tools, mastered patience, and weaponized risk. But what happens when the entire game changes overnight? When every rule you've learned becomes obsolete? Act 3, the evolution. Chapter 9, the meta shift. When the rules change mid-game. Most traders don't lose because they're stupid. They lose because what used to work stopped, and they didn't notice. They kept playing yesterday's game, in today's market, using old rules in a new war. In chess, this would be like sticking to your favorite opening even as your opponent sacrifices everything to blitz your king. But in trading, it's more subtle, because the board still looks familiar, the candles still form patterns, the indicators still flash signals, but none of them matter anymore. Why? Because the metagame shifted, and you didn't shift with it. What is a meta shift? It's when the invisible logic of the market changes, even though the charts don't say it out loud. Volatility drops, liquidity dries up, narratives die, crowd reflexes invert. Suddenly, breakouts no longer follow through, dips no longer bounce, high beta names stop reacting to news, leaders become laggards, and if you're still playing the old playbook, you're now the one being played. Look at crypto's evolution. 2017 was ICO mania, buy anything with a white paper, then it died. 2020 brought DeFi summer, yield farming printed money, until it didn't. 2021, NFT fever, profile pictures worth millions, then silence. 2024, meme coins. Each time, the early players made fortunes. The late players held bags. The difference? Recognizing when the music stopped. Why do meta shifts happen? Because markets are reflexive ecosystems. Too many traders exploit the same edge. That edge gets crowded. It stops working. New edges emerge. This is why edges degrade. Not because they were bad, but because everyone found them. Remember buy the dip from 2020 to 2021? It worked every single time. Until 2022, when every dip became a cliff. Same setup, different regime, opposite outcome. The metagame punishes the obvious and rewards the adaptive. How to survive and win meta shifts. First, zoom out often. Stop being hypnotized by the 5-minute chart. Ask, what are the big players repositioning into? Second, map crowd behavior. Are breakout traders still confident, or are they slowly disappearing? Third, journal friction. Are your best setups suddenly failing more often? Are you getting chopped where you used to dominate? That's not bad luck. That's friction. The signal that the terrain has shifted. Fourth, run meta-diagnostics weekly. Ask, what's working right now? What's failing? What changed in the last 2 weeks that most people haven't processed yet? Because meta shifts don't scream, they whisper. In chess, when your opponent stops developing pieces and starts sacrificing pawns to open your king's file, you adapt or you die. In trading, when your setups stall and your risk to reward compresses, you adapt or the market removes you. The goal isn't to find a forever strategy. It's to become a forever learner. Don't worship the system. Worship the ability to evolve. Because in the metagame, the greatest skill isn't entry timing. It's knowing when the whole game just changed. Chapter 10. Detecting the regime shift. OOB. How to see a market change before it tells you. The most dangerous market isn't a bear market. It's a changing market. One that still looks like what you know, but acts like something else. Where your best setups stop working, your stop placements start bleeding, your intuition gets foggy. And the more you try to force clarity, the more the game slips out from under you. That's a regime shift, a structural, behavioral, and psychological rotation in the market's mood. And if you can't feel it early, you're not trading, You're playing an old game on a new board. What is a regime shift? It's when volatility contracts or explodes. Liquidity moves from high time frame participants to low time frame traders. Narratives expire. Volume changes hands from strong to weak, or vice versa. The market's personality mutates. It's not always visible on indicators. It's emotional, rhythmic, subtle, like a player who once defended with caution now starts sacrificing pieces out of desperation. December 2021 to January 2022. Best example I've ever seen. Same charts, same patterns. But suddenly, every bounce got sold. Every support cracked. BTFD became STFR, sell the rip. The indicators didn't change. The participants did. Risk on became risk off. And if you kept buying dips in January like you did in November, you got destroyed. Why do regime shifts happen? Because the metagame is reflexive. Too many players lean into one strategy. The edge decays, liquidity dries, a new dominant behavior emerges. Just like in chess, you overuse a particular opening. Opponents study it. It becomes easy to punish. Now you're forced to adapt or be dismantled. Same in trading. Buy the dip becomes fade the rally. Breakout becomes trap. Risk on becomes don't touch anything. The players changed, the crowd psychology changed. And if you didn't notice, you're now food for those who did. How do you detect a regime shift before the crowd? First, feel friction early. If your go-to setup starts failing not once, but consistently, without clear external cause, that's not bad luck. That's a tactical decay of edge. Mark it, track it, respect it. Second, watch participation. Are big players active or quiet? Are wicks cleaner or nastier? Do moves follow through or stall instantly? The character of who's playing has changed, so must your expectations. Third, measure emotional intensity. How hard is the crowd leaning on one side? If everyone's short, expect rips. If everyone's euphoric, expect exits. If everyone's quiet, prepare for surprise. I use a simple metric, Twitter sentiment plus put-call ratio plus VIX level. When all three align extremely, regime shift incoming within 2 weeks. It's hit 8 out of 10 times. Fourth, check narrative lifespan. In stable regimes, narratives last weeks. In shifting regimes, they barely last days. When even good news gets sold off or bad news causes no panic, you're in transition. What do you do in a regime shift? You tighten, you slow down, you observe. You test with small risk, wide eyes, and zero ego. This is not my board right now. Let me figure out who's playing before I pick a side. This is the difference between the losing trader and the metatrader. The loser blames the market. The metatrader watches the wind and repositions his sail. Because in chess, the storm doesn't announce itself. But the best players, they feel the tremor. They spot the pattern fracture. They adjust their entire game before the collapse comes. But what if your opponent isn't human? What if the metagame is being shaped by code? Machines with no emotion, no hesitation, and no need for rest. Then the question becomes, how do you outplay something that never blinks? Before we dive into algorithms, let me share something I've never talked about publicly. March 2022. I'd been trading for 7 years, built a solid 6-figure account, felt invincible. Then I met the machines. In 1 week, every single setup I touched got front run. Entry, instant wick against me. Stop loss, tag to the penny, exit. Price exploded minutes later. I lost $180,000, not to the market, to something I couldn't see, couldn't understand, couldn't fight. That week broke me, but it also taught me the most valuable lesson of my career. You don't beat the machines by being faster. You beat them by being human. Let me show you how. Chapter 11. Against the machines. Outplaying an opponent that never blinks. Some traders fear volatility, others fear missing out. But the most dangerous fear today? The fear of becoming obsolete. Because the modern metagame isn't just crowded, it's automated. You're no longer just playing against retail, whales, or funds. You're playing against algorithms, entities that don't sleep, don't feel, don't second guess. They scan thousands of markets, make millions of micro decisions. They front-run liquidity, exploit latency, react to news in milliseconds. And here you are, human, emotional, and delayed. So, what chance do you really have? More than you think, but only if you stop trying to beat machines at their game and start playing a game they can't see. What algos do best? Speed execution. They exploit inefficiencies faster than you can blink. Scalping volatility through high-frequency trades, arbitrage, flash spikes, liquidity hunts programmed to target obvious stop zones. Not out of malice, but because that's where the meat is. Reaction-based execution responding to what has happened, not what's about to. But here's the truth. They lack context. They lack story. They don't know what traders believe, what fear feels like, what silence suggests. They follow patterns. You follow intention. And that's your edge. May 6, 2010. The flash crash. Dow dropped 1,000 points in 36 minutes. Algos detected selling, amplified it, created a death spiral. But here's what most don't know. Human traders who stayed calm and bought the crash made fortunes. The machines created the opportunity. Humans with context harvested it. How metatraders beat the machine. First, play the human game. Algorithms excel in straight lines, but they fall apart in irrationality. When sentiment flips violently, when memes drive inflows, when a narrative spirals before the code catches it, that's your window. They can't feel why the market moved, only that it did. You don't front-run price, you front-run belief. Second, trade time frames they can't dominate. High-frequency bots live on the tick and 1-minute charts, but they're often clueless on the 4-hour, daily, and weekly narrative arcs. You operate where stories unfold slowly, where patience creates positioning, and execution is less about speed, more about clarity. Third, predict the predictable. Most algos are coded with basic logic. Breakout equals buy, stop cluster equals sweep, mean reversion equals fade. Once you spot this behavior, you can anticipate it. Let them trigger stops. Wait for them to exhaust. Enter on the human flush that follows. Fourth, master the meta-noise filter. Algos amplify false signals. They cause fake breakouts. They spike candles on thin liquidity. They crowd the same setups. So the metatrader adds new filters. Is the volume real or manufactured? Is the move supported by sentiment? Are the wicks violence or just noise? I learned this the hard way. Used to trade every breakout. Win rate, 30%. Then I added one rule. Wait 15 minutes after any explosive move. Let the algos finish their game. My win rate jumped to 65%. Same setup. Different timing. Massive difference. Your tools against machines. Wick tracking. Heavy wicks in both directions equal algo warfare. Stand aside. Reaction. Windows. Time. How long it takes for price to move after a key event. If it's instant, bots are controlling it. If there's a delay, emotion is present. That's your entry zone. Story versus speed analysis. Does the move make sense in narrative context, or is it just a mechanical flush? You don't outclick a bot. You outweight it, outthink it, outfeel it. Because when markets become mechanical, emotion becomes a rare commodity. And when emotion becomes rare, it becomes valuable. The algorithm plays the chart. You play the crowd watching it. And that's how the grandmaster wins. Not by being faster, but by seeing what the machine can't calculate. But even if you outplay the machines, you still face one final opponent, the trickiest of them all, the only one who knows all your habits, fears, and blind spots, your own mind. And if you can't master that, you'll sabotage everything. Chapter 12, The Final Opponent. Mastering the mind behind the move. By now, you've outweighted retail, outread funds, outmaneuvered narratives, outlasted regime shifts, even outplayed the machines. But there's one final battle left, and it's the one most traders never win. The opponent who knows your every weakness, who whispers during every loss, and shouts during every win, who doesn't just influence your strategy, but becomes your strategy when you're not paying attention. It's you, because no matter how advanced your system is, how deep your metagame insight runs, if you're still controlled by fear, ego, revenge, or doubt, the market doesn't have to beat you. You'll do it yourself. The meta loop of self-sabotage. You start with clarity. A small win inflates confidence. You size up, break rules, get sloppy. You lose not just money, but identity. Now you have to win it back. You chase, you tilt, you spiral. Sound familiar? This isn't a bad streak. It's an emotional pattern pretending to be strategy. True story. March 2022. I'd made $47,000 in 2 weeks shorting the bounce, felt invincible, decided to press my luck, sized up 3x on the next trade, no stop. I understand this market, I told myself. Lost $62,000 in 3 hours. Not because the analysis was wrong, because I'd stopped trading the market and started trading my ego. The market didn't beat me, I beat myself. In chess, a grandmaster doesn't just study tactics. He studies self-regulation. He tracks when emotion creeps into his hands. He senses when his thoughts turn from intention to insecurity. In trading, you need to do the same. Because the difference between a 10K month and a blown account is almost never the market. It's how you responded to yourself when pressure showed up. The metatrader's inner framework. First, emotional risk management. Position sizing isn't just about capital. It's about your capacity to hold uncertainty without collapsing. Ask, how much uncertainty can I psychologically carry before I self-destruct? That's your true size limit. Second, ego as a hidden position. Every time you enter with a need to be right, you're already holding risk even before your first dollar. Track it, tag it, journal it. Let your ego speak out loud so it doesn't whisper mid-trade and hijack your exit plan. Third, meta-journaling beyond P&L. Stop recording wins and losses. Start recording. What version of me entered this trade? Was I hunting clarity or redemption? Did I wait or did I need to feel active? Because who you were before the trade is the best predictor of what happened after. Fourth, the pause ritual. Before any high conviction move, ask, what emotion is most active in me right now? If this trade goes against me, will I still feel centered? If not, don't trade the chart. Trade yourself first. My pre-trade ritual, 3 deep breaths. Name the emotion I'm feeling. Rate my revenge urge 1 to 10. If it's above 3, no trade. This simple practice saved my account multiple times. In the metagame, the final boss isn't volatility. It's the silent script you run in your own mind. The beliefs about success, the buried need to prove something, the fear of stillness, the addiction to doing instead of waiting. You are the only opponent with unlimited access to your strategy, and the only one who can take it all down from the inside. But when you see this clearly, when you can sit across from your mind and say, I see what you're doing, and I don't need to follow anymore, that's when you stop playing checkers. That's when you stop playing chess. That's when you become the board. So, what happens now? After you've seen every layer, fought every enemy, faced yourself, the answer is simple. Now, you must choose the kind of player you'll become. The final chapter isn't about edge, it's about identity, and how to play the long game when the game never ends. Chapter 13, Becoming the Board. Playing the game that never ends. This is where most stories end. The hero defeats his enemies, survives the trials, finds the truth. Roll credits. But in trading, there are no credits, no final boss, no moment where the game stops and someone hands you a crown. Because this game, it never ends. The market evolves, the players rotate, the narratives mutate, and every edge you've built, every insight you've fought for, will be tested again, in new disguise. The only constant? You. The mind you bring to the board, the rhythm you play with, the self you choose to become. At this point, you've learned to see through false setups, anticipate narratives before they explode, detect regime shifts before they're obvious, use risk like a scalpel, not a shield, trade other people's psychology, not just price, and tame your own mind when it starts to turn against you. You no longer ask, is this a good trade? You ask, who's trapped? What's the dominant emotion? What story is being told? And when will that story break? This is meta-trading mastery. But it's not the end. It's just the beginning of a different kind of journey, a journey of inner architecture, of building a mindset so resilient, so adaptive, so fluid, that even when the game changes again, you don't just adjust, you welcome it. So, what does it mean to become the board? It means you stop seeking perfect setups. You start creating asymmetric conditions. You stop reacting to the market. You start shaping how the market reacts to you. Your presence bends liquidity. Your execution leaves footprints. Your restraint causes curiosity. There's a trader I know, never tweets, never shows P&L. But when he enters a position, the market feels it, not because of size, because of timing. He's learned to enter at the exact moment when others are most uncertain. His trades don't just profit, they resolve tension. He's become gravity in his markets. You become a meta-shaper, a trader whose moves influence the decisions of others, not through tweets or ego, but through pure, silent mastery. The long game of the metamaster. First, think in decades, not days. You're not here to make $1,000 today. You're here to build decision-making capital that compounds over years. Second, detach from outcomes, attach to process. You no longer care if a trade wins. You care if it was well played, well positioned, executed with clarity. Third, teach through action. You don't need a signal group. You don't need to prove anything. Your trades teach silently. Your equity curve whispers, this is what patience looks like. This is what real timing feels like. Fourth, stay curious forever. Metatraders don't become masters by arriving. They become masters by staying students of the unseen. The moment you think you figured it out is the moment the market turns you into the pawn again. So you journal, you reflect. You remain a student of behavior, energy, tempo, and self. And in time, you'll look back and realize you stopped playing chess. You became the quiet force behind the board, not the pawn, not the king, not even the hand moving the pieces. You became the terrain others must cross, the invisible shape they feel but can't see. The gravity beneath the game. The metagame isn't something you win. It's something you become fluent in. And in that fluency, you don't just trade better. You think better, decide better, live better. Because when you master the hidden game, you stop needing to prove you're a player and start becoming the board others learn to respect. Welcome to the other side of the chessboard, the game beneath the game. The place where patience is power, stillness is strength, and the greatest trades are often the ones you never take. Now you see it, now you can never unsee it. The real game has just begun. If you made it this far, you're different. You're not looking for quick wins. You're building something deeper. Your next move is simple but not easy. Open your journal right now. Write down 3 things. First, the last time you got trapped. What emotional state were you in? Second, one pattern from this video that explains your biggest loss. Third, which chapter hit you the hardest and why? Post your answer below using MetaTrader Awakening, not for me, for you. Because awareness is the first move on the new board. And if this shifted how you see markets, share it with one trader who needs to hear it, not the whole world. Just one person who's still playing checkers on a chessboard. Remember, the metagame rewards the patient, punishes the obvious, and transforms those who see beyond the candles. Welcome to the other side. The board is yours now.